What's going on, guys? It's GBP baby. Welcome back to another video. I hope everybody's doing well, and hopefully you've watched yesterday's video. If not, definitely go check it out, and let's get straight into things. So we're going to start on the daily, and you'll see that we did have quite an interesting day in terms of reaching into the inversion fair value gap, which I drew our attention to. But then you'll see that price did overshoot it a little with its wick, wicking into this rejection block level right here. The 4 hours a little bit more clear as to where we were trading to. What I find quite interesting here is if we look at this fair value gap from back in November and we drag that through, you'll see that we pretty much just filled that with volume today. So although we've wicked through it 1, 2, 3, 4, 5, 6, 7, 8 times, price has wicked through this range and has failed to trade through it. You'll see that today we actually traded into it, closing inside of it and then leaving it straight away. So I do like the look of this. Why? Because it should act as an inversion fair value gap now, the fact that we've closed outside of it, and that is supportive of our bearish bias of wanting to see the high get created on Tuesday or Wednesday and see continued downwards price action as we run into the rest of the week. What's also interesting is how we're hanging around this breaker low. Ideally, again, if you watch yesterday's video, you'll know that I wanted to see price pretty much stop at this breaker low and then turn around. However, there was a lot more overzealous price action than we anticipated, but nonetheless, the fact that we're below that, I'm still anticipating this to act the same way. So I'm going to keep that still there delineated. And there is another thing. There's a concept which ICT mentioned a while ago in his live stream about how price can wick inside of ranges like this as many times as it needs to before it leaves it. Now, this isn't something I've studied too much, and I can't remember the exact physics of it, so to speak. But if we look at this range from this high of this wick to this close, and we look at this range, you can see how price has wicked into it a few times, including today, and price has left it multiple times. And I think this is playing into that same kind of idea which is talking about, and that then technically makes this long wick a rejection block as well, because every time price has traded into it since this wick was created, you can see how price has failed to trade through it, and volume has remained below it. So this is all supportive of bearish price action, especially the fact that volume is closing outside of it on the downside. And then another thing that's supportive of this is the fact that this displacement all the way from November when we first broke down here, if we draw this range out as well, we can now treat this pretty much as a breakaway gap. And the reason for that is because although we've just about tapped into it, price has failed to trade into it significantly. So again, the fact that this is staying intact, this fair value gap is pretty much staying open, and price is refusing to trade into it, is acting as a breakaway cap, which can support our bias of wanting to see lower prices. So moving into the rest of the week, my bias still remains the same. And let's now drop down to the 1 hour and take a closer look. And you can see our price created that high at 10 a.m. and then since then has displaced to the downside. So this large up close candle on the 1 hour is now a bearish order block. As soon as this candle delivered at 1 p.m, that then allows that to be a bearish order block. So let's get rid of a few things, just make it a bit more clear. I'm going to get rid of the inversion fair value gap just because the range is a little bit useless at this point. The consequent encroachment, I'm not really paying too much attention to that anymore. And we're just going to look at more local PD arrays, so to speak. So let's look at this bearish order block from the hourly. We'll draw the open of that out, and this is going to be the very highest I want to see price trade tomorrow if we're to remain bearish. It's possible price may not even trade into that, but if we do see some kind of rallying, that will be the highest I want to see price trade. And then I'd expect price to be able to turn around at that and start sending it into this massive fair value gap that was created this morning at 2 a.m. and then into the Tuesday's lows. So let's get those Tuesday lows marked out as a sell side liquidity target. Daily highs and lows are what price moves to. And again, look at that Sunday price level. The fact that we've traded above it again today and we're expecting a down close week, Wednesday and Thursday and Friday can now start to target getting below this level. So I am looking for price to continue to drop on lower. And yeah, I think it'll be pretty smooth in terms of its delivery, because as far as I'm concerned, price should be done up here and it shouldn't need to rally any further. The only thing that did throw me off though is the fact that we didn't respect that breaker low, because us running up like this but then getting instant pullback, although it's overshot our original bias, we can still look at this level, which is the wick which we traded into, and you can see our price just tapped that before breaking lower. So it is difficult in terms of understanding, but it's just a matter of us getting back below the midpoint of Tuesday's price action. So moving into tomorrow again, on Wednesday, I'm going to be looking at the Tuesday's midpoint. Once we're below that, I'll be comfortable with expecting more shorts on dollar with longs on the pairs for it to then run for that Tuesday low and towards that Sunday opening price. So that's going to be everything on dollar. Generally speaking, I'm just paying very close attention to this level right here. I don't want to see that get violated, and then I'm looking for that Tuesday low to get taken, and us to start getting below that Sunday low when I then expect price to run, and then I'll be looking at this low right here as a nice target for price. So that's everything on dollar. Let's head on to GBP USD. And we'll start here on the daily, and you'll see there's quite a lot of strength in pound in that it failed to take out any sell side liquidity, which is completely fine. And you can see we had a nice up close day, and now we're starting to head towards the buy side, which is what we wanted to see. So again, if you haven't watched yesterday's video, go check it out. But this blue line is where I'm wanting to see price draw up towards. So we want to see continued upwards price action. And what we can do now, let's get rid of a few things. You can see how we've used this bullish order block. We traded into that today, and then what happened? We came out of it, and price is now closed on the upside. So ideally, now that that's been mitigated, I'll be looking at the 4 hour to try and find PD arrays within this range to then use to then help us try and get into that Friday high. So let's get a few of these levels taken out. And let's just mark out some buy side liquidity, which I've got my eyes set on, such as this high right here. And then I do like the fact that we've closed above this range that I drew out. Is this on the 4 hour? No. Yes, it's a wick. But nonetheless, there is a breaker here. We've got a low, high, lower low. And this last up close candle is a breaker. And then we also have an inversion fair value gap now that should help us. So if we drag that through as well, and we've closed above it on a 4 hour basis, price shouldn't need to drop any lower than this inversion fair value gap. We should be able to start running towards our buy side liquidity. If price manages to violate 50% of this, whole nother story, and price will probably continue to consolidate quite heavily. But generally speaking, we should be able to see price move on upwards, as this inversion fair value gap should remain bullish for price. So here's the 1 hour, not the cleanest of days, as you can see. A lot of back and forth price action, and it wasn't until the London close that we started to see actual expansion. So that's quite interesting, but it is nice to see our price traded down. Where do we trade down into? Well, you'll see we have a bullish order block right here. Look how we tapped down into that, and then look at the response we got away from that. Another thing to take note of is this Sunday opening. Let's draw that out, and you'll see again how price opened this week, dropped below it, and then we dropped below it one more time. But look how volume's treating it. It's staying at that Sunday open, and it's leaving it to start running for the upside. And then again, this is the buy side target I have my eyes all set on. So ideally, moving into tomorrow, it's just this a 4 hour fair value gap, which I want to see get respected, and I want to see continued rally. And I do believe that pound's the stronger pair. We will take a look at Euro GBP later, just to see if that supports that bias. But as far as I'm concerned, price shouldn't need to get any lower than this. And then you can see we have a point of mitigation right here, as in we have a breaker. So we've got a low, high, low, low. Last up close candle, we might want to draw that out. You'll see that's coupled nicely with a fair value gap right here. So that could create the low of tomorrow, which would be ideal. So let's get that drawn out. Like so. We'll make this, let's make this orange. Actually, let's make it blue. We'll get rid of the dash line. And then again, we might see that London opens, drops into that, and then trades on higher, or Asia session will do it. But generally speaking, this would be my perfect setup if we trade into that and start to leave it, because then I know that we can start looking for that Monday high and potentially that Friday high as well. So that's everything on pound. I hope that all makes sense. This bullish order block also supports that. If I was to trade this, so if I was to go long as price trades into that, my stop loss would simply go below here, because it's below 50% off the order block if you want to be a little bit more risk averse, so to speak. And then I'd be targeting these highs right here. But this is assuming that price does drop into it and leaves it. So it needs to drop into this at a significant time, such as between 3 a.m. and 4 a.m. or between 8 a.m. and 9 a.m. for me to be confident in that trade. And it's not just time as well. I need to see movement. See how we expanded at 10:30 here, that kind of movement, how price is rushing. I want to see that. And obviously dollar would have to line up by respecting its premium PD arrays, which I've already delineated right here. Price would have to respect that and start to trade on lower to support that. So that's everything on GBP. I hope that all makes sense. And Another thing I want to take note of is how, actually we'll talk about it at the end, but there's divergence, and I'll talk about that once we've done euro. So let's go to euro, and you'll see how euro dipped perfectly into our range. So if you watch yesterday's video, you'll remember I called out this level right here, and look at how price came down into it, and look what happened. We left it just as anticipated. So what's interesting about euro is that although it was weaker getting into its discount, it's going to struggle to get out of the discount. But it's interesting that we were able to find the exact, like, look at this, look at the low it created today. The low of this was 1.04984, and the range I drew our attention to was 1.04982. So that's what, like 0.2 pips or whatever. You can't make that stuff up. It's algorithmic. So let's take a look at the daily and work our way down and see how we came to that. And obviously it's not always this accurate, and we need to take that into account. However, it's nice to see, and it helps us with the rest of the week and looking at other pairs, because it's like, okay, well, we're seeing support over here, so something must be going according to our expectations. So here's a fair value gap from the south side of the curve. All I did was drag that through, creating a bullish fair value gap, and you can see it did act accordingly. So we dropped down into it, and then we traded it off away from it. So moving into tomorrow now, the fact that we've closed like this, I'm looking at that 50% level, which is now consequent encroachment. As far as I'm concerned, if we're to remain bullish, price shouldn't need to drop any lower than that. So let's get that dashed. And now we have a new level, which would be the lowest I'd want to see price trade. Ideally, we don't even get down there. Ideally, it would be the 25% level, which is about there. But once we drop down to the lower time frames, we should be able to find PD arrays that support that, such as this bullish order block. But now we have a range, and then obviously we have a nice imbalance right here. But I do believe euro has some catching up to do. What's also interesting is how we traded down into this bullish order block and got this reaction. This is another reason, this one right here. So another reason I'm expecting price to be able to rally away from here, and then we can look at that again, Friday high similar to pound. But again, I think euro is going to need some sentiment for that, which is why I wouldn't be surprised if euro might consolidate tomorrow a little bit. And then you can see we have high impact news on euro on Wednesday. Is that Wednesday? On Thursday and Friday. So that might be when we see euro make its movements. Like, it might just be lagging a bit behind for now, with the intention that later in the week, as in Thursday and Friday, it'll start to run. So let's go to the 1 hour, and we'll see that range again. And again, we've got a nice bullish order block right here. So that open of that bullish order block is a 25% level off that wick. Remember, this was the 25% level, so let's get that delineated. So it'll be nice to see if price can drop down into that, which is a fair value gap as well on the 1 hour. And then that would offer a nice long position. And then I'd want to hold on to that for the rest of the week, assuming we can start running for that Monday high. So now that we have this fair value gap as well, we can look at this as a range, and that then gives us, you know, limits, as in we don't want to see price drop below this fair value gap. This fair value gap should act bullishly. We're allowed to wick into it, we're allowed to trade into it, but any lower than that, and I'll be suspicious. Ideally, price should be able to stay above it, and volume should be able to close above it if we are to be bullish, and price is going to run for that Sunday opening price and that Monday high. So hopefully that's all making sense. As you can see, get that buy side liquidity marked out there, but it is beautiful. It is nice to see how beautifully price turned inside that range. Now that it's done that, we just need to see that continued sponsorship and respect of such levels. And then we also have some inversion fair value gaps, such as right here. So between this low and this high, drag that through, make it black. That just happens to be this level, this 25% level. Can't make that stuff up, guys. And you'll see how, again, price shouldn't need to drop down below there. Why? Delivered on the downside, closed above it with, you know, with movement on the upside. If we're going to touch it again, it should act sensitively to send it higher. Assuming, again, dollar respects what we're expecting it to respect and allows it to trade lower. So now I'm just going to quickly take a look at Euro GBP. And yeah, here's the strength we're seeing in GBP. So look at how Euro GBP dropped significantly. This is heavy movement to the downside on Euro GBP. Let's go to the daily and take a look. Yeah, that's a large day. So this down movement is explaining why GBP is being able to push so hard higher up, and obviously dollars matching that. Not to the same amount of pressure. Like, it seems like dollar's holding pretty well. And what's also interesting is how dollar and pound both closed higher, but that's why we're seeing so much strength on pound, because obviously Euro GBP is clearly struggling quite a lot. So if we see that this continued to the downside, let's see where it's heading. It looks like we're heading towards these lows. If we see this happening, then if we're any kind of longs, we should be looking for longs on GBP USD, and then shorts on Euro if that's the case. And then the other thing I wanted to take our attention to was divergence. Now my laptop is lagging a bit, apologies. Add dollar, and then we're going to add Euro. Oh, start again. Right, GBP, add dollar, add Euro. So you'll see how pounds made a higher low here, which is all well and good. And you'll see how in line with that, oh, my bad. Never mind, I thought the divergence was different. Anyway, let's take a look still. So pounds made a higher low. You'll see that euros made a lower low, whilst dollars made a higher high. So euro and dollar are the ones in tandem right now. I didn't realize, I thought it was the other way around, but this is almost hinting something, as in pounds refused to take out this low for a reason, and it might be a matter of dollar needing to catch up, and again euro is going to catch up at the end of the week. So we do need to pay close attention to this, but this is definitely something to study this week. So we've had violation of lows on euro, violation of highs on dollar, but then pound is the one showing the strength. So that will be interesting to see how that plays out later in the week. Anyway, that's going to be everything for now, guys. Thanks so much for watching. Don't forget to drop a like, drop a comment, smash subscribe, join the mailing list, and let me know what you think of the new thumbnails. And yeah, I'll catch you tomorrow. Peace.